Well, good day, active trend traders. This is Dennis. Welcome to today's tech tip. And we're discussing about multiple time frame analysis to discover hidden triggers for potential entries and exits. Remember that all materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. So let's jump right onto the charts. One thing that I really like about the Thinkorswim trading platform is the ability to do these type of charts. This is a 3-grid chart. You can get them set up, 2-grid, single grid. One of the things that that I want to bring across as a point for all members today as you're watching this video, and also non-members, is that oftentimes I see traders, they basically get stuck in one time frame, like a daily chart, primarily a daily chart, or they'll go into a 5-minute intraday chart, which is too short unless you are a dedicated day trader. But for swing and trend trading, you want to be aware of what's going on across time frames. And if you hone in on just one time frame chart, there's a potential of missing hidden areas of either support or resistance that would show up on a longer term and sometimes a shorter term chart. And so having a chart set up like this gives you the opportunity to take a look at that. Each one of these, what I have here is I have a 1-hour chart on the left hand side. I'm covering about, let's see, I'm from the 18th of July through today, so about 2 weeks worth of data. And then I've got about 6 months worth of data from April 21st, 5 months of data through today, which is the 2nd of August. And I've got Tesla up here. And then on a weekly chart, I'm going about a year's worth of data. I'm going from June last year to this week, which is the week of the 7/31. And so as I take a look at this and I look away, I can go either start over here on the left and work my way across to the right, or I can, and I'm going to get rid of all these past drawings because I don't want to get any confusement there. There we go. So all the drawings are now off, and as you can see, Tesla's getting ready to have earnings after market today. So what we can pull across from this is we can see, okay, on a 2-week basis, we can start here and say, okay, Tesla on a 2-week basis has basically gotten up to this high. This is one area we're going to take a look at. So that's the high, and that's the low so far. And as we can see, that turns out to be about a $36 range, as we can see. And so as I click these into place, I'm going to delete this one real quick. I want you to watch what happens over here on the intraday, or the daily and the weekly chart. So let me go back here and click this in, put in this lower level. Watch what happens in those circles on the other side. Bam. It basically transfers the drawing over to the other charts. And so as I'm watching these, I can sit there and go, okay, that's on an intraday basis. That was my intraday range. And of course, it corresponds to the daily range and also this weekly range. But it does let you know that, hey, this has encompassed 2 weeks worth of information. Okay, it's good so far. I can also go in here, and now what I can do is basically just color these, and I can say, okay, I want my intraday chart. I want to color them blue, let's say. And this is, so I can color it real nice blue. I can change the size of the thing. And so then when I see that blue on a daily or weekly chart, I will know that, aha, those were put in there on an intraday basis. So just, you don't have to do that, but that's one way of looking at it, potentially looking at it. And so other things, what else do we have going on here? Well, basically Tesla broke down from this line here. So I can basically draw in a trend line going up and what transpires. And I'm going to just change that for the time being, change that over to a raspberry color. So what does that tell us? On a weekly chart, what it's saying is basically, okay, you broke and it fulfilled that pattern right there. That pattern turned out to be a shooting star type pattern and it broke down. So I could sit there and go, okay, on this, that was my trigger to get in. But I also can look over here on my intraday chart, and that happened first thing in the morning. And as soon as it breaks down from that area, I should be taking a look at that. And the moving average also on these intraday charts, as you can see, we had rebounded back up into the moving averages. The short-term 8 and 20 period moving average on an hourly chart had turned over, had crossed, and you saw in earlier training that was a negative sign and giving us clue that we're going to fall, potentially fall down from there. Cross the 50 period moving average, and away we were off to the races. This trigger right here on this hourly chart, 6:30 a.m. on when was that? That was on Friday. Was our trigger to say, hey, get ready to get short here. And sure enough, we go on and 7:30, 6:30, just following these across. And that was your trigger to get short. But that's what I'm talking about, is what we saw here transferred to here. We can plan our action on an intraday chart, not so much on a weekly chart. Now we can go back over here to the weekly and let's see what we see here and see how it corresponds to the other charts. Let's go with a longer term. See these lower wicks here? Well, we can put in a trend line across there, or a support level, and I'm going to make the longer terms just for shins and grins. I'm going to turn it into a dark brown. Okay, and so there it shows up on the intraday chart down here. If we get down to that level, that may be a place to bounce. And what else does it correspond to? Well, it corresponds to where it's bounced before. As we see here, came down, hit support, which was not, if that line had been in there from that past support. And the interpretation and analysis on this is basically we've hit that level multiple times in the past. That is a substantial level of support and or resistance. That's our takeaway. So then several weeks later, when we hit it again, that can tell us be ready to trigger in to a potential trade here, especially when the convergence of clues are telling us through the TSI, through the momentum, and also through the market forecast that, we may be getting ready for a reversal. And as you can see on Tesla, was it a good reversal? Well, yeah, it ran approximately, 14%. It ran up about $40. And so is that, then each individual trader has to make up their mind. Is that a worthwhile valuation that I would want to participate in? So we'll keep that in mind as we take a look. And as you can see, that's what I want to pass on to you. These multiple time frame endeavors are very important. Let's erase our drawings one more time. And the other thing I'm going to do is I'm basically going to draw a trend line. No, I'm not. I'm going to draw a trend line that I see here on a weekly chart on Tesla. So there's it hit a low here, it hit a low here, and then it raced on up from there. So I can draw that trend line in, and guess what? Well, we broke down from that trend on the week of yeah, the week of 7/31. No, 7/3, excuse me. And we actually broke the trend line on 7/5 and hammered on down to the 100-day moving average on 7/6. Well, what did that look like on the intraday chart? Let's see if we can go back that far. Well, as you can see, is if we had that line in there, we could have seen that, aha, we're getting a rollover here on Tesla. And I can draw this in here. Run back up to the 8-period moving average, and you see then it fails. I can draw in a circle here to say that's where we failed. That corresponds to this failure pushing up against the moving average. And again, these intraday, daily, and weekly clues are telling us, okay, here's how to trade around this. So I hope this has helped a little bit on the importance of doing multiple time period evaluation. We can get into a lot more depth, but I want to keep this video really short. So thanks a lot, guys. God bless.